You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade, Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
Fall in boot. It's time to get into peak options trading shape. It's time for Options Bootcamp.
All right, everybody, that music means we are back once again. It is time for a little bit of Options Bootcamp, what the cool kids call OBC. My name, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging these days. Remember, if you want to get everything on the full feed, the only place to get it is, of course, get the Options Insider Radio Network, wherever you're getting your favorite podcasts, or, of course, on the old tubes and other platforms. Audible carries it. You can get our stuff in a boatload of places. I know there's a hardcore Options Bootcamp audience, and we love you all out there, but make sure you're checking out the full network. Usually 3 shows hitting you a day now, including the Hot Options Report after the bell out there, and a whole bunch more. And of course, if you're ready, if you want to go in for an awesome deep dive into some cutting-edge research on all things unusual activity, does it work, does it not work, which strategies are most effective, which don't work, all sorts of cool stuff. We did that with our good buddy Dr. Vix. His latest piece of research hasn't even gone public yet. Our pro folks got it. TheOptionsInsider.com/pro is the place to go. If you like cool exclusives like that, it's pretty cool. I have to say so myself. Then make sure you're checking it out. Giveaways, live streams, oddities at the end of the week. If you like more unusual activity, whole bunch of that in there. TheOptionsInsider.com/pro is the place to go. As we go around the horn, see who's joining us on the old Wednesday OBC. I am pleased to be joined once again by our good friend, Mr. Dan Passarelli III, Esquire, from MTM, a.k.a. the black-hatted one himself. Mr. P, welcome back to the show, sir. How are things in MTM land?
Hello, Mark. Things are just splendid here in MTM land. How are things with you?
Give our listeners an update on the book. How goes the next legendary tome?
Oh, man, I've been cranking, and it's been, it's really fun. I have a love-hate relationship. I have a hard time, finding the time and sitting down and such. But when I do, I don't know. I just really like the process, You're
like every other author we've had on the network. They all, as they're doing it, say, never again shall I ever go down this dark path. And then 6 months, a year later, they're like, yeah, I'm working on another book. And I'm like, do you not hear what you just said a few months ago out there? So listeners, you can get your hands on Dan's latest epic tome called The Mark Longo Experience, coming soon to bookstores near you, as we keep on rolling right on into a little bit of, I guess, our new mini segment, Dan. It's time to get exotic.
Let's get exotic.
It is time, Dan. It is time to get exotic. Are you ready to go down these wild exotic pathways once again, Mr. Dan? Do you have your exploring, your spelunking gear on, sir?
Yeah, man, I'm looking forward to it. Let's do it. Let's do it.
We're getting weird this week. I'm just preparing you now. We're getting a little weird. If you ever said, I like options, but they don't give me enough choice. There's not enough option to my option. I want to be a little bit choosier with my options. If you've ever said that, Dan, then this is the show for you, because we're getting into the absolutely terribly named chooser option. There's all sorts of problems with that. It's kind of redundant. You could kind of assume that the term option implies some sort of embedded choice in there. But hey, chooser option, Dan, I guess, they didn't really put a lot of effort into the naming convention. Is this a exotic option that you are familiar with, sir?
I'm not gonna lie, I had to do a little looking up for this one. I have never traded one before, but I mean, yeah, I think I heard of it.
You never choose the chooser before?
No,
All right,
I have not.
Let's choose some choosers this week, shall we? That's a terrible name. All right, let's get into it. What is a chooser option? What are we choosing? What else is there to choose after you choose to trade an option? Well, good question. Chooser options, I should say, are exotics that let you go beyond just, let's say I want to buy my call, my whatever, power call on XYZ and let the dice fly. You get to have more choice, as the name implies, with a chooser option. That lets you choose at some future date, called the choice date, whether that option is going to be a call or a put. So, Dan, there is definitely a theme I'm noticing with a lot of these exotics that we're breaking down, is that they are for very wishy-washy people.
Yes.
They can't commit to a strike or a month, or even if it's going to be a call or a put. All of that at the onset, way too much choosing for them. They want to have a lot of flexibility embedded down the road. So that's who these exotics are mostly for, Dan. Extremely indecisive people. If you're the kind of person who sits at a restaurant for half an hour after everyone's already gotten their food and you're still looking at the menu, then these exotics are for you, Dan. What do you think?
Yeah, it kind of seems that way, doesn't it? Geez Louise. I mean,
It's like they're bending over backwards to take away any sort of choice that you have to do. Like, oh, you don't want to choose? You say, don't worry about it. We'll change the time. Oh, you don't want to worry about this in a caller? Don't worry. You don't have to choose that yet. That's down the road. We'll get there. We'll cross that bridge when we come to it. All right. What are we choosing here, listeners? So choosers let you, as I said, at a future date, called the choice date, choose whether that option that you bought. So you're literally just buying an option. You don't even have a call or a put yet. You get to choose at a future date whether it becomes a call or a put. So you can see there's a lot of embedded optionality in that. And if that wasn't enough for you, they come in a variety of different flavors, Dan. I feel like I'm at Baskin Robbins, the chooser Baskin Robbins here. There's even a rainbow one. We'll get there in a second. So this is definitely a 57 flavors here. Let's start off with your basic European chooser, listeners. As the name implies, European and American. If you've been listening to the show for a while, you can probably reasonably intuit what those flavors are. The European chooser, that means you get that choice date. So at a certain choice date, you decide whether your option is going to become a call or a put. So that's if you're really uncertain about what the hell this underlying is going to do, but you want to do something down the road. You just don't know what. So that's where the European chooser comes in. A good example, let's say Tesla. Let's say you buy a 1-year chooser option with the 450 strike. Now, right now, given where Tesla is, somewhere around 420, 430, maybe you want it to be a call if you're optimistic. Maybe you want to have an in-the-money put. Either way, this European chooser, your choice date is 3 months from now. So it's a 1-year option. Your choice date is 3 months from now. So in 3 months from now, they're finally going to hold your feet to the fire and say, you must decide, is it a call or a put? So 3 months from now, maybe Tesla's hanging out at 450 and you think it has more room to run. You say, I'm going to turn that into a call. Thank you very much. That expires in 1 year. Then your strike price stays the same the rest of the year. Or you might say, hey, I think Tesla's toast. I want it to be a put. And bam, there you go. You got a put. for the rest of the year. It's obviously a very kind of specific use case. One of the common uses for that, if I can call anything common with these, maybe you're trading a pharmaceutical name and you're waiting for FDA approval around a drug, Dan. So that's obviously a huge crapshoot. So in that scenario, you may know you want some optionality at a certain date. You just don't know what you want, Dan. And apparently buying a strangle or a straddle is too expensive or just too much work for you, Dan. Then this is an option. This is kind of like having an embedded straddle. It can go either way. So there you go. Trading a pharmaceutical with a European style chooser, sir. What do you think?
Yeah, actually, that like really clicked. I don't know if I ever told this story on the show, but I used to work with a guy who had a background in pharmaceuticals and, just how it worked with the drug trials and stuff. And I remember one day, I forget what the drug was, but we were looking at the straddle and calculating what the company should be worth intrinsically if the drug is approved and if was not approved. And the straddle, like it was basically a break-even expected straddle. Like if the drug was approved, congratulations, you made so much money on your straddle that when the vol crushes, you break even. And if it doesn't, same thing. So this would be a way to trade it. Yeah.
So there you go. Dan warming up to the choosers out here. There's another flavor of that. If you want to, now, if the European style is not doing it for you, Dan, you want your God-given American right to choose at any time, then there is an American style chooser for you as well. As the name implies, you can choose your call or put at any time, listeners. So there is no more choice date. There really is just the expiration date for the option. So let's do an example here for Apple. They have it here at 180, and that's a pretty low strike now. It's about 70 handles out of the money, but you could buy a 180 chooser option in American style in Apple. That expires in 6 months. If the stock is still here around 250 6 months from now, you're going to want to call on that. But on the flip side, if, let's say, Apple falls out of bed in the next 6 months, you could turn that into a put. And again, that could be around some sort of, maybe you're looking at a company that's in takeover talks, and you don't really know how that's going to unfold, whether they're going to be bought out or not. That could be one way you could potentially use the American style choosers. So American, European style choosers, I think our audience can get around that. Now, Dan, what if I throw a new flavor into the mix? What about a Bermudan chooser, huh? What does that scream to you? A Bermudan style chooser option, sir?
I don't know, but I think if you fly into it, you're going to get lost.
Yes, that could be it. It just makes no sense, and you vanish once you trade it. How about that? Now, this is very similar to the other two listeners, but instead of one choice date like the European variety, or choose any time willy-nilly in the American style, their Bermudan has a predetermined set of discrete dates. And by the way, the American style is going to be a little bit more expensive than the European style because you have a lot more flexibility baked into that than the European style. So if you're looking to save some money, the European style is the way to go. If you're looking to spend a little bit more money but have more flexibility, the American style is the way to go. If you want to kind of split the uprights, a little bit more pricey than the European style with a little bit more flexibility, but you're not fully as expensive as the American style with all that wild, untamed flexibility, then the Bermudan is the case to go. In the case of this one, maybe with the Bermudan listeners, maybe you're looking at the earnings cycle for a company, and let's say the next 3 quarterly earning calls, you know you might want to have some action on that name over the next 3 cycles, but you don't really know what. So you might decide a Bermudan style because there's 3 specific dates that you're focused on that you want to choose, whether it's a call or a put, and those both line up with the earnings dates, and that's really all you care about with this name. So if that's you don't need to pay for a whole bunch of American style flexibility, but you also need maybe a little bit more flexibility than the European style. So there you go, Dan. We all learned a new term today, Bermudan style chooser option, sir. Put that one in your back pocket for a rainy day.
Dude, I mean, who needs all these different things? Like, this is pretty crazy, man.
There was a very bored sales trader or iBanker is like, I need a lot of stuff to sell. What can I do? I choose every day. You only choose one day. What if they want a few days, but not every day? Here you go. Again, this is for very indecisive people. listeners at the end of the day who also have access to large amounts of capital. So kind of an interesting Venn diagram there. Let's get even deeper down the rabbit hole, shall we, Dan? If Bermudan not floating your boats, how about the old-fashioned asymmetric chooser option? The strike may differ, and the maturity may differ, depending on whether you choose a call or a put. For example, maybe you got an asymmetric one, and the strike, if you choose it, is 100. But if you go the put route, you get a different strike, a lower strike of 95. So that could maybe be functional. Let's say you're looking at commodity hedging out there where obviously their skew is different and the downside maybe is in a different scenario than in the upside. And if certain things happen, you might obviously want a different strike on the put than you would on the call. So gives you a little bit more cushion, a little bit more wiggle room on that. Also going to be a little bit cheaper, I think, than what you're looking at with some of the other ones we're talking about here. So if that's your case, if you would prefer maybe instead of having it all on one strike, letting it all the dice roll on the par strike, for example, maybe you want a little bit lower strike on the put. There you go. An asymmetric chooser option is for you, Dan. Now, what if that is not enough choice for you, Dan, in this world? You've had the Bermudan flavor. It's not for you. American, European, not cutting the mustard for you. Not even the asymmetric. Dan, allow me to present you with your new favorite trading strategy and indeed product, the forward start chooser option. So this is another one where they have a selected choice date ahead of time. And at that choice date, not only do you choose, Dan, whether it's a call or a put, that's kind of just table stakes now at that point, but you also choose the strike price, which is set to be the at the money of the underlying at the time. So I guess technically you don't choose it. The market chooses that for you. So you have a forward start date. Sometime, let's say a 1-year option, in 3 months is maybe the forward start date for this contract. That's when your underlying sets the strike for you, and that's when you choose call or a put. Again, this is kind of an obscure one. There's some use cases for if you're doing ESOPs, employee stock options plans, you want to lock in some things at a certain funding date. Again, very, very specific use cases. Then maybe the forward start chooser option is for you. But Dan, that's not enough. You need more, Dan. All right, you ask and you shall receive, Dan. Just for you, because I like you. You said, how about a compound chooser option, also known, Dan, as the chooser on chooser option? How does that sound for you? Double choice.
Oh my gosh. Holy crap.
This one really, really made me laugh. This one's great. So if you're talking about being indecisive, they can't even choose to buy a chooser, Dan. They have to buy an option that gives them the right to buy an option, aka a chooser option down the road. Because God forbid they be held to buying a chooser option. No. That's not for them. That's far too much commitment. I guess the other side of this is these are commitment-ophobes, Dan. They cannot make a choice and stick with it. They want the right to buy a chooser option at some point in the future. Now, this is getting really down the exotic rabbit hole. It's kind of like a second order exotic, Dan, because you're buying an option to buy another option out there. So it's very meta. This is kind of arcane stuff. This is really specific use cases, kind of for M&A, kind of going haywire. You maybe would want one of these, or maybe some big change to regulation, which is really going to crush or really impact the company in some way, shape, or form. That's kind of really the only specific use cases you really would see these. But again, if you want to be even more indecisive, a chooser on chooser option, Dan, is the one for you. Now you might say, okay, that's all the choosing I can stand, and I can't take any more. And I would say, I understand, but we are not done. Because Dan, the Baskin-Robbins analogy continues. What if I told you, sir, that not only could you have all the other flavors you talked about, Bermudan and American and European and chooser on chooser. What if I told you, Dan, there was a chooser rainbow option? What would you say to that, sir?
I'm thinking somebody has some synesthesia going on here. They like had too many mushrooms on their pizza, and it wasn't the right kind of mushrooms.
So the rainbow option, Dan, you can't even be bothered to be tied to an underline for this. The rainbow is like, I can't be forced to choose an underlying to make a trade on. What kind of person would do such a thing? What kind of monster, Dan, chooses the underlying that they want to trade an option on ahead of time? That comes later. That comes down the road. And that's what a chooser rainbow option is, listeners. It allows you to choose at a choice date which underlying the option will be on, in addition to whether it is a call or a put. So there's a whole lot going on that choice date, Dan. So let's say you can't decide between stock A, you want to call on stock A, or a put on stock B. Maybe you're a hedge fund doing a bit of a pairs trade. I can maybe see a bit of a use case for that. Maybe you're looking between oil and nat gas. So let's say, if you think certain things happen, maybe a little bit of a Mideast dust up. Maybe you think oil is going to take off, so you want to call on nat gas, or maybe you think something else could happen, and then all of a sudden nat gas is going to fall through the bottom there. So maybe you want a put on nat gas, but you don't really want both. Then maybe the rainbow chooser option is for you. Another example, Dan, let's say you're an airline and you have oil exposure, obviously fuel cost exposure, and also exchange rate exposure. So that's another, again, this is kind of getting into the weeds, but this is kind of a real world use case you might see, listeners. So you want to hedge oil to the upside, obviously. If oil explodes, you're going to want to call there. Also, you'd fly a lot to Europe, so you have dollar-euro exposure there. So you're going to want to put on the USD-euro rate as well. So you can buy a one-year rainbow option, listeners, and in 6 months, you have your choice date. And in 6 months, you decide whether you want to call on Brent, Dan, or you want a put on Euro USD, and you get to choose your strikes as well. If it's Brent, you get $80 call. If it's the put, you get the 105 put on Euro USD. So again, kind of wild, Dan. It's I could see that specific use case, maybe an airline. This is choice on steroids, Dan. This is options for the most indecisive among us, sir. What say you?
Yeah, man. Geez. I'll tell you what though. I think we might have talked about this on one of these past episodes on this stuff, but I just wonder like how much they have to pay above theoretical value and what the commissions are on this stuff, man.
Well, I'm guessing the spread is pretty wide because they're the only people quoting these to you. And they've created this nonsense just to lure you in and say, come on, look how awesome this rainbow chooser is. Don't you want a piece of this? And then the spread is atrocious. And you have to trade with them to get in and get out. So, yeah, you're going to get hit on both sides. So, yeah, it's probably pretty juicy. That's a good thing. I would like to do a little bit of digging and see, you're right, what some real world prices are for these. Because we see the relative comparisons. Well, this one should be cheaper than that one because it has less flexibility, but maybe some real world pricing examples. I'll call up all my friends on the desks, Dan. I'll get some real world rainbow chooser prices. What do you think?
Yeah, that would kind of be interesting, really.
They'd be like, nobody trades that crap. All right, Dan, we're not done yet. What if I told you there was one more chooser you could choose?
Is it the... I know what it is.
Don't tease me.
It's the... You get to choose the over or under on how many upticks are in the box.
Yes, over, under, uptick chooser. It's a huge one. They do tons of... That probably would be the busiest one they have, quite frankly, if they had that. No, Dan, unfortunately, you are not correct. It is the Lookback chooser options. This is kind of combining the chooser with some of the other exotics you talked about in the past that do a little bit of a look back. And that's kind of what the look back does. You get to choose your option. On this case, there's no choice date. The choice is made at the outset. So you choose call or put at the outset. But the strike, so effectively the payoff, is going to use the minimum or maximum price, depending on whether you're looking at puts or calls, over a particular window. So let's say 6 months, maybe you buy a put on XYZ, you're going to get the strike is the maximum price of that underlying over that 6 month period. So not a bad do if you're buying a put From there, you get all that look back fun. We talked about look backs before, listeners, so I won't go too deep into this one. Again, this is something maybe you're looking at a particular event risk. Could be a Fed announcement, an election, something like that, where you're really concerned about that. You're concerned about a big swing around one of those periods. This type of look back chooser can do just that. All right, Dan, we've done a lot of choosing. Are you exhausted on choosing? Have I sated? You asked me before the show. You said, Mark, can you please take me on a journey with 1,000 flavors of chooser options? Have I sated your desire for chooser options, sir?
Man, I'm the kind of guy, when I go out to a restaurant, if there's more than 7 items on the menu, oh God, it's just like, I've actually gone into restaurants before and just said to the server, what's your favorite thing? No, don't even tell me. Just bring it.
Don't even tell me.
Take it.
Oh, I didn't know. I liked cod liver oil soaked salmon eggs dusted with some other additional liver and some pate on top. That sounds delicious. Thank you, dear server. That sounds fantastic. You know, it does sound fun though, Dan. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get down to business here, listeners. Let's look really quickly. We asked you last week on the show a very important question for this audience, which is quite simply, how long have you been trading options out there, listeners? We gave you a variety of choices. We said less than 1 year, 1 to 3 years, 3 to 5 years, and north of 5 years. And I'm trying to find the actual live results here. Looks like it went out with about north of 60%, Dan, saying north of 5 years, 3 to 5 years, 21%, 1 to 3 years, 11%, and less than 1 year, Dan, 8%, sir. What are your thoughts? Initially, it was like 25% less than 1 year, but then the hardcores came to play, Dan.
Wow, man. Yeah, that's great. That is a testament to our hard work, maybe, right? We're getting we're nurturing a whole generation of smarter option traders, Mark.
Well, yeah, they've been listening since episode 1, Dan. They are hardcore in the options world. They've been doing it for over a decade. They'd blow away our poll here, north of 5 years. They're considered old hands at options now, sir. So yeah, it looks like the hardcores came out to play. Speaking of coming out to play, Dan, our question of the week this week is kind of an interesting one. Bit of a contentious one. There's a push afoot right now in DC to change earnings season. You know, earnings season is a fun one usually for options traders. Gives them a little bit of stuff to trade around, gives them a little bit of vol, a little bit of action. We obviously crunch a lot of earnings data on our website as well, theoptionsinsider.com. Click on the options news and articles tab. You will find all the earnings data going back till pre-pandemic days, listeners. So a lot of great free data there for you. So we have some skin in this game, Dan. We like talking earnings season. But there's a movement afoot right now to say, you know, earnings season is every quarter. Maybe we should dial that back. Maybe let's say twice a year. And so we thought, hey, what do you folks think about that? Should we keep earnings season quarterly? Or do you agree maybe we should dial it back to twice a year? Or are you crazy? Maybe you hang out in Europe and you only want earnings once a year, Dan. What do you think?
I mean, I think it's a terrible idea. I mean, investors, and I'm not talking about traders. For traders, I don't know. I mean, I don't think it matters. You know, if you're using technical analysis, it doesn't matter. But for like fundamental investors, which is something that, you know, over the past several years, I've invested a great deal of time into. I mean, you're basically keeping people in the dark as to what your numbers are for a whole nother 3 months. I mean, like, investors have the right to know. I mean, like, if you invested in, like, you know, a restaurant down the street and the guy who owns the restaurant that you gave $100,000 to, he just keeps saying, yeah, I'll let you know if we're profitable. Give me another couple months. Like, no, you don't want to, like, you should know if the investment in a business that you made, you should know how that investment's doing.
Yeah, I'm with you. I mean, there's an argument that companies get too myopically short-term focused, and so that's why they want to push it back a little bit. And then maybe there's some truth to that, but I'm with you at the end of the day. Less transparency is not a good thing, especially in this market. There's enough skullduggery going on with names reporting every 3 months. Imagine if we dialed that back. So less sunshine, less transparency, not a good thing. Our audience agrees, Dan, 55.2% right now saying, let's keep it quarterly. 27.6% saying twice a year is fine, and 17.2% they want to go once a year, Dan. So there are some hardcore British folks in the audience, I guess, who really like their once a year announcements. We got our pro member here, Mr. Age of Delaquarius, chiming in. He says January and July is fine with him. That's interesting because he's on the hardcore options side. So I think the options folks would want a little bit more to trade, right? Selfishly, they want more things to trade in the options world. So kind of interesting. Get over there at Options and make your voice heard. Dan, are you feeling MTM question of the weeky, or have I exhausted you with choosery choosing?
Oh, yes. Well, yeah, go ahead. Fire away.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Dan, little birdie tells me you've got a question of the week all about chooser options. So have at it, sir.
Yeah, here's one. And, you know, this is going to probably prompt more questions than give answers. But I get asked this a lot. And that is, how does somebody get started in this business nowadays to become a professional trader? And it's a lot different than it was back in the day when you and I were getting started, because the business changed so much. And I think that one of the things is to focus on programming and mathematics. That's one way into it. And another is, you know, just find a company that has traders and get a job there doing anything. That is kind of the exact way that a lot of people in mine and Mark's day did it. That's how I did it. I went and just knocked on doors in the Board of Trade building and got a job as a runner, you know.
So
got
please,
my feet
sir,
wet
can I carry your upticks for you?
Yeah, that's about it. And so, like, now all these jobs aren't housed in one building anymore. So which is in some ways better. You can look online and just, you know, get your foot in the door. Even if my first job was $9,000 a year out of college. Even if you go and, you know, you could be like a 30-year-old not going to college person working on an internship, which just means you're not getting paid, because who cares? You just get the experience and move yourself on up.
Yeah, it's a challenging road out there now, Dan, especially, you know, when what we did, you know, obviously we were able to come in and there were a lot of firms looking to hire new people to become market makers. There were programs everywhere, training programs, and a lot of firms willing to commit time and capital to train you. That's not really the case anymore. They expect you to come in. They want you to have all sorts of different types of, usually quantitative degrees these days. And then they will commit to a few of you. And that's about it. And the days of training and lengthy things and all these other things we were used to, and that's kind of all gone. So yeah, it's a very, very different world out there. That said, there are some folks I've talked to from this show and others on the network who have managed to come back in and become market makers in the somewhat traditional sense, Dan. So it does still exist. It's just a definitely much more difficult, much smaller path than it was back in the day. But Dan's going to do it for us on the old OBC today. Not going to do it for us on the network. I will be back at 2 p.m. Central with a special guest to talk all things futures. I got a feeling he's going to want to talk about some gold. So if you're down for a little bit of gold talk, then by all means, join us at 2 p.m. If you're hanging out in the pro, just hang out. We'll be back in a little bit with all sorts of gold fun. Then we'll be back after that to wrap up your day with the son of Odin himself, a.k.a. Thor, the Hot Options Report out there. Before we do that, Mr. Dan, sir, Where should folks go if they want more Passarelli goodness in their lives? Maybe to discuss with you at length all things chooser options.
We still do in advance of the book, I am doing a little project, a podcast project. And if you listen to podcasts, give it a listen. It's not going to last forever. And so it's all on the wheel. And you can just go to your favorite podcasting platform, which you're on right now, and look for Wealth Building with Options. Wealth Building with Options.
There you go. Wealth Building with Options. If you haven't had enough podcasts in your life, especially if you haven't had enough podcasts, make sure you check out our friends over there at Tasty Trade, tastytrade.com/podcasts, the place to go to check out everything they've got on offer for listeners of this fine show. So if you want a little deal on your brokerage and you want to check out a cool platform to boot, those folks have been on with us on the show before. tastytrade.com/podcast, the place to go to learn more. Got to get on out of here now. Back again in a little bit for the Futures Rundown. Back again after that to wrap up the day with the Hot Options Report. Then we're back with our usual array of content throughout the week until we're back next Wednesday. Another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade, Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.